If you're in your 20s and you're just getting started with credit cards, this video is going to save you from making tons of costly mistakes. And look, in this video, I'm not going to talk about things like late payments or derogatory marks. I'm going to talk about things that they don't teach you in school, things that you don't know that you should know that's going to help you build your credit so you can secure financial freedom. I've seen too many people get caught up in these credit card blunders, and today I'm going to make sure that you're not one of those people. So look, in this video, we're going to cover the common 7 mistakes I see people make when it comes to using credit cards, things that they should know and things that they should be doing to build their credit and focus on a financial future that's bright and great. I'm here to help you navigate the credit game. You're gonna learn some great stuff. Make sure you watch to the end so you don't miss a single mistake, and let's jump right into the video. Today, we're going to break down 7 big credit card mistakes people in their 20s are making right now. And I know what you're thinking. These are probably not what you think they are, like late payments or collections or things like that. We're not going to talk about the obvious stuff, but we're going to dive into the kinds of mistakes that could quietly sabotage your credit or can set you back years of progress that you could be making, but you don't know that you could be making. And we're going to talk about how this all relates to accessing more credit in the future or getting discounts on things that you're buying, things that you don't learn in school, but they're crucial if you want to build a strong credit profile and best equip yourself with the right tools for success. So this is going to be very important money advice, not financial advice, but just it's going to be great advice to help you best leverage your credit and really make sure that you're not making these very simple mistakes. So the first mistake, and I talk about this mistake pretty often, is not getting enough credit cards early on. And I talk about this mistake pretty often. Sometimes you'll see people who have just one credit card. Maybe you just have one credit card with a $500 limit. You may think that you're just playing it safe, but you're actually missing out on a lot of opportunity to build your credit profile. In fact, a lot of people don't know this, but the most valuable score, like one of the key factors that actually contribute to your credit score, one of the key factors that actually contributes to your credit score is actually having more opened accounts. So if you actually have more accounts, this positively impacts the total number of accounts that you have with your credit. And it's one of the 6 major factors besides late payments payment history, derogatory marks, credit card utilization, inquiries, average age of accounts, total number of accounts. And those are going to be the big credit factors that impact your credit score. So one that you could take advantage of very early on is actually getting a lot of credit cards. So, say that one day, however, right, you need like a mortgage or you need a car loan, you're oftentimes going to get better rates when you've demonstrated that you have more than just one credit account. So maybe you're watching this and you're someone who has 1 or 2 or 3 credit accounts, whether those are loans or credit cards. The top ranking that you can have is having more than 21 accounts. So by having the faster that you can get to those 21 accounts, the faster that you could start building weight on the front end of your credit age. So that way your average age of credit also just continues to age. And when you do open new accounts, it doesn't really affect your new age of your average age of credit all too much. So let's actually make an example of this. Say that when you're 21, you find a way to open at least 10 or 15 accounts, whether those be loans, credit cards, and so on. And then by the time you're 35, right, 13 years later, you open up maybe 1 or 2 more credit cards. That's not going to greatly affect your average age of credit history as much as it would if you were maybe starting with just 1 or 2 accounts at 21 years old. So don't worry if you're older and you're watching this, maybe you're in your 40s or 50s or your 60s or even older, you still have the opportunity to get credit, and maybe you've been building your credit for a long time. So just some key points here, right, that you could take with you, some key tips here that are going to matter is when you start applying in your first year, try to get at least 2 or 3 cards. You might be able to get more. I know my brother, for example, he's 20 years old. And by the time he was 19, he had at least 4 credit cards. Now, does he use all of them? He uses them for different things. We're going to get into that later on. But
it's very important because by the time he turns 30, he's going to have many accounts that have been carrying along credit age that have high credit card limits, and it makes it easier for him to get approved for higher limits, get approved for better rates because he's been demonstrating a good borrowing history for a very long time. Another key tip here, right, is that if you're going to get a lot of these accounts, try not to get accounts that are going to have an annual fee that are going to add extra costs. Because just think about it. If you end up closing that account, that's essentially that's going to be an account that ends up showing as closed on your credit profile when a lender comes around to go look at your profile. And it could affect your average age of history. So if you're going to build your credit long term, try your best to get cards that or accounts that don't have an annual fee so that you can build a really great future with your credit. And additionally, too, right, try to avoid a ton of hard inquiries. And if you're going to get a ton of hard inquiries at once, just do them all at the same time. Do it in spurts where you get maybe 3 credit cards in a single month. Try not to just keep spreading them out. I mean, this point, it could kind of go both ways. You could kind of spread them out, or you could stack them all together and do them all at the same time. But I think the big point here that I would make just regarding this point is maybe not do like one every single month, because that looks like you're seeking too much credit. So try to just really build with a few key accounts in the beginning. Cards such as like a Discover card or an Apple card are really good cards to start with because they don't have an annual fee and they're easy to get credit limit increases with. Also, American Express is a really good personal credit card to start out with. You might first have to get a Discover card or a Capital One card first, and maybe 6 months later, you can get an American Express card. But start out with these banks that will give you soft pull credit limit increases because it'll help you just build a better opportunity for yourself going into the future with your credit, right? So that would be mistake number one. It's not getting enough credit cards early on. It really hurts your opportunity to have a lot of future benefits by not having enough credit cards early on. So try to get more in the beginning so it's easier for you to get better products later on, whether those be loans or credit cards or lines of credit, or whether you want high limits. Try to establish that history with multiple lenders. It's very key to do this with multiple lenders early on. So the second mistake I see people in their 20s often make is that they're not asking for credit limit increases. They're waiting so long, and this hurts them a lot, right? Because although maybe you've had $1,000 limit or something like that for over a year and you consistently pay off your balance and never ask for an increase, this could end up hurting you in the long run because it may eventually be harder for you to get approved for rates that you want on new loans or things like that. Because you're only establishing a history with a low limit, there's not much justification the bank can make to give you higher limits or even give you better rates for higher loan amounts because you haven't demonstrated consistency or reliability with high limits. So you want to ask for credit limit increases early on so that way you can get better results later on. A lot of these mistakes that we're going to discuss are going to talk about just creating future benefits for yourself. And it matters because, especially when you do max out a card, this is going to lower your credit score pretty quickly because you don't have a lot of credit and maybe you're not spreading them out amongst different cards. The higher credit limits you have, this will reduce your credit utilization ratio, which will boost your credit score. And even if you have a pretty high balance, and I've noticed this a lot when we go into 0% interest funding, is that even if someone had like a $20,000 credit limit and a $5,000 balance, they're more likely to get results than someone who has a $5,000 limit card and is maxed out at $5,000 because your credit score often is lower in the second scenario than it is in the first scenario. And it, gives you a better opportunity to borrow more money, and it gives you the opportunity to get higher limits in the future. This is a positive signal to lenders because this gives you the opportunity to just get better credit limits by already having better credit limits on your personal credit. So when lenders look at your chances of getting approved for high limits on business credit, they're going to look and see what your personal credit limits are. And the higher your credit limits are, the better products you're going to get. So there's 8 banks I often talk about, and I'm going to put these banks on the screen here because I did not include them in the key tips. But I want you guys to be able to take advantage of these particular banks in terms of opportunities. American Express, Bank of America, Comenity Bank, Capital One, Discover, Navy Fed, Goldman Sachs, Citibank, and let me see, that's 8 banks. Yeah. These 8 places down here that I listed, they all do soft pull credit limit increases. And you could essentially ask for credit limit increases whenever you want, and it doesn't affect your credit score. And we're going to get into some best practices for getting credit limit increases tonight. But these 8 banks are often really great at giving you credit limit increases and are pretty friendly about it. And you could ask almost whenever you want, and you could constantly update your income as it increases. You could constantly update your rent as that changes. And they're normally pretty good about giving credit limit increases. So ask for them. They help you build your credit score. They decrease your credit utilization and give you tons of benefits in order to do so. So some key tips here, right? Request limit increases pretty often. This is going to help you improve your credit score. It's going to lower your credit utilization. It helps you get approved for higher limits later on. Now, a key tip here, right, is make large purchases on these credit cards, then pay down the balance, then ask for the credit limit increase. I do this all the time with my cards. Maybe I have a business expense. And this is not like the best practice, but I'll do it if I want a personal credit limit increase, and I'll just tell my accountant that I made a business expense on a personal card and it's not a big deal. And I'll max out a personal credit card. I'll pay it down immediately. And right after, I'll ask for a credit limit increase. And it shows the lender, it gives the lender a reason why they should give me a credit limit increase, because it shows that I'm using the full limit that they're giving me on the card that they've approved me for. If I'm not using my card, it becomes a little bit more difficult for a lender to justify giving you an increase. Why should they give you a limit increase if you're not going to use the card to begin with? They're going to give you more exposure if you're regularly using their products, because if they're opening up exposure that they're not monitoring on a regular basis, it becomes risky for the bank to give you more capital if you're not going to use it. They can only extend so much credit, and if you're not using the credit that they're extending to you, they're going to be a little bit skeptical whether or not that they should continue to give you more. So if you want to improve your chances of getting higher limits, make a large purchase, pay it down, and then right after request an increase. It's a great little strategy to getting approved for higher credit limit increases. And again, use soft pull credit limit increases. This is another great tip I can give you guys. And those banks I mentioned here on the bottom of the screen, those are really good places where you can do that. I'm going to remove them from the bottom of the screen when we move to the next slide. But save those 8 banks. If you have those cards, if you have credit cards with any of those 8 places, they typically do soft pull credit limit increases. There's definitely more banks that do soft pull credit limit increases. You can simply ask ChatGPT or look online, look through forums to determine whether or not some of these other banks that are not listed on the screen would give you a soft pull credit limit increase. So that would be a huge mistake I see people make. They're not asking for credit limit increases. I know I didn't ask for my first credit limit increase until like at least 4 or 5 years after I had my first credit card. So make sure that you're regularly asking for those credit limit increases to improve your credit and improve your opportunities for future lending. So a lot of times I also see people choosing the wrong credit cards. Let me know in the chat, guys, if you're someone who has a credit card and you're thinking to yourself, why am I paying this annual fee every single year? Just let me know with the word me if you're one of those people who has an annual fee credit card and you feel like you're just wasting money paying that annual fee every single year. A lot of these credit card companies, and I'll take American Express for example, they try to lure people in with these luxury travel perks, get the platinum card, spend $600 a year to be in the Centurion Lounge. And a year or two or three later, you realize you haven't used any of the perks that they were offering you in the beginning. The point system doesn't even make sense to the categories you spend the most money on. And now you're just paying $500 a year for the wrong credit card. And there's many credit cards that do this, whether it's the platinum card, the gold card, the Chase Sapphire card, the Capital One Venture X card. There's a lot of cards where you end up paying all these ridiculous fees for benefits that you don't even need or spend money on. It just becomes a complete waste of money, right? So this matters when if you're getting these credit cards early on, they're going to carry weight in your credit age. And when you eventually close them, it's going to hurt you more than it's going to help you. And you might end up wasting money. Maybe you don't make a lot of money right now. Maybe you're making $50,000, $60,000 a year, and you got one of these cards and you're wasting a lot of money paying this annual fee. And it doesn't make sense. That's like 1% of your income. If you're making $50,000 a year and you're spending $500, that's 1% of everything that you're earning being spent on this annual fee. That doesn't really make any sense. So you want to avoid these unnecessary fees. You only want to get cards that have an annual fee if you're going to make more money than what you're going to pay in fees. And there's certain credit cards that, you just have to crunch the numbers a little bit. Does it actually make sense to get this card versus this card? For example, there's the American Express Blue Cash Preferred card, and it's a $95 annual fee card after the first year. And it makes sense to get if you go grocery shopping or if you spend a lot of money on streaming services or if you spend a lot of money on gas. If you spend a lot of money on these key categories and the cash back that you're going to get from the card is more than what you're going to pay in annual fees, that makes sense. Additionally, if you're clever, and I like to talk about this method of getting Christmas gifts a lot, the way I'll get Christmas gifts for people is, and this is kind of related to this mistake, is I'll look at my credit card rewards. A lot of these companies like American Express, Chase, US Bank, Bank of America, Wells Fargo, these really big credit card companies, even Citi, I believe, does this, like the big banks in America, in one very hidden way do they compete with one another is through offering extra offers through their rewards portal. So if you go on, you could do this for Bank of America, American Express, any of those banks I just mentioned. I'll just do it with American Express right now, just because it's a really quick and easy for me to access. Say you have a personal credit card with American Express, and let's take the Blue Cash Preferred, right? Because it has that annual fee. Maybe you're not going to the grocery store all too often, and maybe you're not spending a lot of money on gas because you work from home. They still have a lot of different offers that you could take advantage of when it comes to shopping, dining, different services, entertainment. I like to use this especially for Christmas or the holidays or people's birthdays, because there's a lot of opportunity here to get discounts on some pretty nice things that you could buy for your friends and family. So maybe, for example, you have a Peacock account and you have an annual subscription. You spend more than $60 a year on it, you could get $20 cash back with this card. Or let's actually go through the shopping. The shopping would be the best one. Maybe you have to spend on office supplies with Dell.com, right? It's a $95 annual fee, but maybe if you don't spend money on groceries or you don't spend money on gas. I'm talking about how to get out of choosing the wrong credit card and turning it into a good decision. You could go through some of these offers, and Dell will offer you, if you spend more than $250 or more, you get $50 cash back. Or maybe you need to buy yourself a new pair of jeans because you got a rip in your jeans. Common problem. You could spend $150 or more at Levi's and get $30 cash back. Or maybe it's Mother's Day. I do this one all the time for Mother's Day. you spend $50 or more on 1-800-Flowers.com, and you could get $15 cash back, and you could use that promotion up to 4 times every year. So you get $60 cash back, and it's a thoughtful gift, and it's a really cool incentive of using the card because not only are you getting a great gift for your mom or for your grandma or for your sister or for your wife, whoever it may be, but you're also getting a discount on it. You're getting cash back. And this list goes on and on. One year I got my family Ray-Bans for Christmas. I spent $150 or more on Rayban.com and I got $30 cash back. You could buy what? Those are some of the good ones. There's some more. Maybe you have a sports fan in your family and you could go to fanatics.com and spend $100 or more and get $20 cash back. These are all offers that are essentially offered on your American Express app, and they apply to other banks. There are some Dunkin' ones, there are some Uber ones, there are some Pete's Coffee ones. There's some really good ones, some stores that you often spend money on. So if you end up choosing the wrong credit card and you're paying fees, it starts going into these key tips. Analyze your spending habits before choosing that card. You don't want to end up getting cards where they offer these great benefits, these luxury rewards, and all these other great things, and then they end up not really rewarding you at all, right? Another one too, right? Just start with no annual fee cards. Right? If you end up finding yourself getting all these credit cards that don't reward your spending, or you're spending more in annual fees than you're making in cash back or rewards points from the card, just don't start with no annual fee cards. Just start with very basic cards that could give you soft pull credit limit increases, and just focus mostly on the spending categories that you put the most attention on and spend the most money on. And yeah, avoid cards with complicated or irrelevant awards. It doesn't make sense to get a cashback card that rewards, going to the groceries if you don't go to the groceries. Maybe it would make more sense to get the Saver One Capital One card because you get 4% cash back on restaurants if you don't go to the grocery store and you spend more money on restaurants, or vice versa, right? Why would you have the Saver One card when you can get, a card like the Target card that gives you 5% cash back at Target? Really good card. So ignoring rewards points would be the fourth mistake. So maybe you're spending $1,000 a month on a card, but you're not enrolled in any rewards programs. That's $12,000 a year, for example, right? If you're spending $1,000 a month where you're not getting any returns. Where if you were looking at the right credit cards, if you were looking at the right rewards programs, there are a lot of 2% cashback cards now. If you're making general purchases, you should be looking for a lot of these 2% cashback cards, like the Wells Fargo Active Cash card. And even the Apple card. If you use the Apple card, but you use Apple Pay, you don't use the card itself, but you use Apple Pay with the Apple card, you get 2% cashback on all your purchases. I bet a lot of people maybe didn't actually realize that or know that, but there's a lot of opportunity that you could be missing out by ignoring these rewards programs, and it could be saving you hundreds of dollars, if not thousands of dollars a year. Additionally, ignoring rewards programs. One reward that people oftentimes overlook is the 0% offer on business credit cards or personal credit cards. A lot of people sometimes hop on a call with our team and they're like, 0% sounds way too good to be true. And it does, but it's actually something that we all overlook because we think a lot about cashback or rewards points or all these other really cool benefits to having credit cards, but we overlook two key ones, in my opinion, being the 0% and the welcome bonuses. A lot of times when you're making a big purchase, maybe you're buying new furniture, maybe you're getting HVAC repaired, maybe you're taking your car to get serviced, and you want to get a discount. Well, you could just simply open up a new credit card to get a discount because a lot of these credit cards have a welcome bonus opportunity where when you spend $3,000 in the first 6 months, you get $500 cash back or $300 cash back, and you're getting a 10% discount through the welcome bonus on these cards. So that also gives you a reason to open up more credit cards, and we're going to talk about that later at the end. But you should be paying attention to these rewards programs because you could be saving thousands of dollars a year by taking advantage of these welcome bonuses and these rewards points. So sign up for rewards programs that match your spending habits. If you spend a lot of money at restaurants, or if you spend a lot of money on groceries, or if you spend a lot of money on utilities, there's even a built card from Wells Fargo where you could spend money on rent. You get points for spending money on rent. Really pay attention to rewards programs that give you benefits that match your spending habits. Track and maximize your rewards regularly, every day or every month. Really just pay attention to what cards you're spending money with and on what categories you're spending that money on, because you could be saving some extra money every single month. And yeah, you could use your rewards in a number of ways. Like, for example, if you're in business, right, which a lot of people here are in business. For example, you could use the American Express Business Gold Card for your advertising. I use either the Chase Business Premier or the American Express Business Gold Card to spend money on advertising. It just depends on what benefits I want at that given moment. I'll spend money using the Business Gold Card to rack up 1,000,000 points quickly, because when I spend 150,000, I get 4 times points on advertising spend, and very quickly I rack up to 600,000 points, and that equates to $6,000 of flights, which is amazing. That is an incredible benefit. I'll use that for hotels, all these different things, and I could rack that up very quickly, very fast. So it's a really awesome opportunity to be able to do that very quickly. Additionally, I could use the 2.5% cash back opportunity through the Chase Business Premier, because if I make a purchase above $5,000, I'm going to get, what is it, 200? No. If I spend $10,000, let's just use the 10,000 number, I'll get $250 cash back, which is pretty nice. And this starts stacking up and adding up into some nice savings. Not understanding credit card terms and credit card conditions, right? This would be another mistake I see a lot of people make, is because maybe they're not tracking with how long their 0% offer is. Banks offer maybe 6 months, 9 months, 12 months. You got to make sure you're making your payments on time, or maybe you'll lose the 0% offer. So make sure that you're paying attention to these credit card terms, so that way, maybe if you're late, you avoid late payments. You make sure that you're setting reminders on when to pay your bills, so that way you don't get hit with fees. You're setting reminders for when your 0% offers end, so that way you don't end up having a big bill that you're not prepared for, and then you end up paying a lot of interest. And make sure that you clarify any unclear terms. Another mistake I see a lot of people make is that they only use one credit card. So we've covered a lot of this already with just using different categories to, get rewards. But if you're only relying on one credit card for all your spending, there's a lot of potential backlash that you could face there. Number one, your credit utilization is going to continue going up, right? That can hurt your score. Maybe if that bank is having a hard time, and like right now, for example, we're in a very weird time with inflation and the government's printing all this money, and the value of goods is increasing because the government's, printing more money. So this makes it very hard to live, because when you go out to eat, it's more expensive. When you go to the grocery store, it's more expensive. When you go to get gas, it's more expensive. And if you're using one credit card, and for whatever reason the bank slashes your limit, you're going to be left scrambling trying to get another card. But now your credit limit, your credit utilization is super high, and it's hard to get more cards because your credit score is not where it needs to be. So be prepared, get more than one credit card. Make sure you diversify your credit profile. It's very helpful, especially when you have purchases coming up. Maybe if one payment method fails, you can go and use another one. You could be maximizing your rewards. You could be improving your credit score with having more than one card, like we covered in the beginning, right? And you could have all these credit cards to diversify your credit profile and help you increase your chances for future lending approvals, as well as diversifying to make better opportunities with cash back or reward systems, right? Using it for different spending categories, and to keep your balances low amongst multiple cards. So that way, when you do need money, you can preserve having a higher credit score and you have the opportunity to get approved by keeping a high credit score. And so finally, we'll come to the final mistake here, right? Because we have 7 mistakes, is not tracking your spending. So if you're not paying attention to your spending, it's really important, right? Because a lot of people in their 20s, right? They maybe are swiping their credit cards left and right, and they're not keeping track of how much they're spending, and you're shocked to see a big bill at the end. Right now, you're forced to have a balance. So you want to make sure that you're keeping track of your spending. Additionally, if you're leveraging 0% and you're not up to date with your due dates and you miss a due date, you might end up seeing, you're not going to necessarily get a 30-day late payment unless you wait a long time to pay it back. But if you miss a due date, you may lose the 0% offer that you had. So you want to really be in touch with how much you're spending and making sure that you're making on-time payments. And I want to provide you guys a little resource here. So I have a little QR code. And if you don't want to scan the QR code, this is like a tiny URL. But I have an expenses tracker for you guys. So that way you can keep up to date with your credit card balances when your payments are due. That way you don't miss a payment. And that way you could review your transactions. Another thing too, guys, is I've run into this a lot, and this becomes harder as I spend more money on my business, is making sure that you're reviewing your credit card statements. A lot of times, like, there may be a fraudulent transaction that pops up. There was a time where I was buying a lot of Instagram shout outs, and I don't buy them anymore. Just because these guys on Instagram could be ridiculous sometimes with reporting accounts and stuff like that. For some reason, there's a lot of people out there that don't like people who pay for Instagram shout outs. So they like gang up and report those accounts. It's annoying. But there was a time I was paying a lot of these companies for Instagram shout outs. And there was this one company that I didn't recognize that kept charging my card over and over. And so I had to dispute those charges, and it was pretty frustrating. But make sure that you're tracking your spending so you stay up to date with, your transactions. Make sure you're on time with your payments and so forth. So at this time, right, I want to open up to Q&A. These are some simple mistakes, not late payments or collections or, things like that people can often make when they're confronted with their credit. So obviously try your best to avoid these pitfalls. You're protecting your credit score, setting yourself up for financial freedom down the road. Hope that you guys find this training valuable.